My name is Brian Dempsey. I'm the CEO and co-founder this evening. I'm originally from the US, but moved out to Kenya in 2009, and I've been in financial services since then. Mostly the microfinance space, a bit of retail banking along the way, and always at the cross-section. It's a real pleasure to have you all. A pretty momentous occasion for us. And first registered a company in Uganda in 2023. 2010 to 2020. It's like the decade of financial inclusion. I think everyone heard financial inclusion all the time. And we saw mobile money and digital lending give access, which previously wasn't there. And I'm not sure if there's MTN here somewhere in the audience, but MTN here, Safaricom in Kenya, Airtel in certain markets, Tigo, etc. It gave access to a generation that previously didn't have it. The challenge, though, was financial inclusion was increasing. I don't know how easy it is to read this, but this green line, and this was specific to Kenya, but we saw similar statistics in Uganda. This green line was financial inclusion. 90% of people were financially included. In Kenya, and also in Uganda, financial sector deepening started running reports from 2016 on what they called financial health, which was someone's ability to save or invest, to cope with risks, or to manage day-to-day. In 2016, they measured that 39% of people were financially healthy. So we're looking at 61% of people were financially unhealthy. And it just got worse every year. So every year that they measured, and we started in 2020, 17%, so 83% of people were financially unhealthy. This was really concerning because financial inclusion, all the metrics were going up. We've got all this digitization, fintech explosion, mobile money. But if it's not helping people improve their outcomes, what are we really achieving? And we set out on a mission from 2020 to be the premier platform for the workplace. We are a tech-driven company. Chandra, our CTO, leads a very strong technology team. We were brought up over the last decade in financial services, specifically in different markets in Africa. Personally, I've lived in 4 countries and worked in 16 now. And our focus and our understanding is really only these markets. And so we started Power to help improve or empower workers across Africa. Kenya was our launch market, but we knew the goal, the ambition was to be Pan-African. Today, we have companies or offices in 5 countries. We're expanding into more across parts of Southern and West Africa. And we've got some great partners that can help us get there. Our goal is either to be the licensed provider, where in certain markets we'll go and get our own licenses. In Kenya, we're licensed as a lender. In Uganda, we're licensed under UMRA. And then we partner with others who can help deliver or provide financial services through our platform. In other markets, we actually white label, and I'll take you through what that looks like. But we work with existing banks and lenders really to make this dream come true. And what we saw everywhere was that workplace banking was broken. And I think Anthony's probably seen this slide about 10 times. But everywhere, and some can attest to this, a bank or a lender signs an MOU with a corporate. Everyone at that company has to move their salary account to that bank. Once they've done that and they want to get a credit facility, they need to print out a payslip, print out your bank statement, visit the bank branch, meet somebody, fill out a form, and in our experience, it's 2 to 3 weeks to get a facility. And that's for employed individuals. Well, let's call them fully permanent employed. We'll hear from Q sourcing later. Contract workers, casual labor, gig workers, informal markets, they're completely excluded. So the best of the best, the formal workforce, which only makes up about 20%, are served this inconvenient, manual, expensive solution. won't go through everything here, but we re-envisioned that solution from the ground up. We built out an entire platform that starts with a fully digitized digital core banking engine. We built an interface for corporates and employers. So we deal both in the private sector, where private companies and their workforce can sign up. Every HR or management has access to an online portal. They can control and onboard workforce into the platform. And with that, we get an enormous amount of information that we can provide the least expensive short-term credit in the market. It's certainly better than what some of the telcos might charge or banks. And it's because we're able to digitize the entire process end to end. For the workforce, we have mobile app and USSD. And they're able to download our solution, register via identity, and then we automatically qualify them for several different services on the platform. So this is what our home screen looks like, and Chandra will take you through a demo. But once workers come on, they can actually see their earnings, their net take home. We're working on budgeting tools so that people can start planning for their future. We also did a ton of research where the average employee has 3.7 other sources of income. This is an average across lots of employees. But lots of side hustles. You might have a small rental unit here, someone maybe selling chicken from a small farm, etc. But that seems to be who our customers are. They've got their main hustle and they've got their side hustles. So building in that information, we can actually capture additional earnings information, expenses, and building out a whole budgeting tool is in our roadmap. So the holistic set of tools that we open up, you'll see on different brochures or posters, we call it pay, save, borrow, and protect. So the first is our pay module. It's more like my pay. Don't think about it like payments. But I can have power over my pay. So today, if I'm in a tough spot and it's middle of the month, what we used to see was that 67% of workers would spend all of their money in 5 days. So they get paid, 5 days go by, maybe they pay their rent, sort their bills out, maybe pay off a loan from last month, send money to a family member. That small amount left over is just simply not enough to get through to the end of the month. And we see that time and time again. And so most people have to rely on either friends and family if something comes up, or really expensive microcredit. Depending on country, 15% a month, 20%, 30% a month. And almost 90% of the workforce does that every month. That's been our data. We've done over 300,000 loans, millions and millions of dollars in disbursements. That's what we see every month. And so with Power, they can access a percent of their earnings at any time throughout the month to avoid some of the predatory lending. The 3 top use cases for Power, school fees. In fact, May is a big month for school fees. Medical emergencies, and working capital, which we think must go towards side hustles. That's our pay module, and effectively it's a short-term credit. We automate the process of repayment, so it's automatically deducted through corporates. It takes away the stress, the headache of thinking about how do I repay, or when do I repay, or how much do I repay. And what that allows us to do is offer those rates. So we take away the stress, we're offering the best rates in the market, and we're working with the corporates, which results in more productivity, less absenteeism, and just a happier workforce overall. We've been consistently ranked for several companies as their best benefit that they offer their workforce. Our savings module, the Power to Save. What we used to see when we were launching banks across different parts of Africa, Chandra and I were leading that, was everybody aspires to save, but very few people actually save. So we used to do surveys, and get about 96% of people. If I asked everyone here, who wants to start saving and investing for the future? I think everyone raises their hands. When it came down to it every month, we only saw 4% of people consistently saved every month. Sometimes they don't earn enough, but oftentimes there was all these points of friction. And so when we actually started Power, before I even thought of the name, I registered a company called Frictionless Financial Services, which is actually what our official name is under the regulator. But we want to take away that friction. And the best way we've seen to help workers save is for them to make a decision in advance, where they can say, every month, I just want to put away 2% of my salary, because I know if it hits my current account, I'm going to spend it. And so the solution allows them to set that, and it goes in as a deduction on their earnings. They don't have to think about it. It's automatically scheduled, deducted just like you would see your pay-as-you-earn, NSSF, etc. And that gets automatically swept and invested. We don't touch it. We just help enable it and work with partners. So we have Samam in the room. I think Zeno is also represented. But we work with regulated partners to help make that reality. And we help workers put away money for the future. Critical for us in financial health is, do you have short-term liquid money available in case of emergency? And are you building for the future? So do you have a retirement fund? And we want to help workers, no matter what your income level is, start to do that. We see individuals, I think we have close to 10,000 security. When we launched savings in the past, the average savings is $3 a month. So you can start small, but it can lead to big things. Our third module is our borrow module, which is exactly what it sounds like. It's longer term credit, fully digitized, provided to the workforce, and they can repay over multiple months or multiple years. Our system's flexible enough to adjust pricing, limits, loan tenor, and it's unique to every single individual. The great thing is HR can also see what's happening, to turn it on or off for different staff, turn on or off different modules, or can also log into review and approve. So we have that setting as well. Like, if you're HR, do we just allow all loans to go out, or do we need to approve it? And then finally, our protect module, insurance options, and we'll finance them. So if workers, a lot of workers aren't covered. It's just the reality. Sometimes they are, but their dependents aren't covered. Or sometimes it's not their dependents, it's their parent or a sibling. So we help workers access medical cover, and we'll finance it for them. So we present them with different options. The one that they like, we'll make the payment upfront to the underwriter. The policy gets issued, and then we'll collect from the worker's earnings over a period of time. So that's our entire platform. Power as a lender, ourselves, we work with regulated partners to provide insurance or investment opportunities. And together, all of this platform is really the financial health. On top of that, we offer education and financial wellness trainings for the workforce. 100,000 potential workers, hundreds of thousands of loans dispersed, 10 million, 500 corporates, and we're also looking to move into the government space as well. And on top of that, we're expanding into new markets with our white-labeled workplace banking platform. We've gone live in Zambia with a partner, First Capital Bank. We're live with Rafiki Microfinance Bank in Kenya. We work with several other lenders, and there's a few other exciting partnerships that are underway at the moment as well. So this allows us to really combine the best of both worlds, where we're the technology partner to regulated, well-capitalized bank that has the lowest cost of capital, and that can provide financial services leveraging our technology that are affordable, digitized, convenient, and we think can really change the face of financial health